from the start, the main features to look at are the last acceleration in the long-term downtrend and this reversal area. They provide clear landmarks to base Fibonacci levels on. In this case, we focus on extension levels, especially those in blue, which are less commonly used. Because it's such a wide range, they fill in the missing detail between the 1 and 1.618 levels, where unsurprisingly a downswing takes place. With the drop, this range reverses roles to offer support. The range is in line with these past structures, including the continuation and last major downswing. There's the rebound after direct contact with the Fibonacci level. However, resistance is still strong and extends up towards the 1.618 level. With such a sharp drop and rebound, this can also be framed in the context of a Fibonacci retracement going from those lows to this recent high, to better outline the recent sharp drop as a larger retracement. The range of this bearish retracement can be used as a good reference soon, and this range at recent previous highs becomes an important lower boundary, which actually won't likely be contacted anytime soon given this movement. So we base new Fibonacci levels on that large bearish retracement, and we'll also check those less common levels, which are colored in blue as well, though here we don't really care about what happens in the range of the retracement levels from 0 to 1. Focus is on the extension levels beyond 1. The same bearish retracement can also be used as the basis for a Fibonacci time zone. On the way up to the first 3 extension levels, that prolonged stall to the uptrend centers around this Fibonacci time zone line, and this intersection quite neatly identifies the first upswing during this new downtrend. Then there's high volatility in the short term upon reaching the next intersection, which marks the general area where more neutral to bullish sentiment develops to halt and eventually reverse the downtrend. Adding a trend-based Fibonacci time zone based on these major structures we've been using can help identify more intersections and confirm the existing ones with more detail. As would be expected, the steep acceleration begins to halt as the chart begins to contact previous high ranges around 31,000. And actually the 1.382 line of the trend-based Fibonacci time zone intersecting with this horizontal Fibonacci level near 31,000 quite closely marks the center of a bearish reversal area. And during the preceding drop, these intersections mark several points of interest, mostly relating to temporary support that delays the downtrend's relatively quick progress.